Yes, good afternoon. Actually, good morning for those of you in Colombia. I'm André Castellini. I'm a partner based in São Paulo. I'm a senior partner of our private equity practice. Thank you, ColCapital, for the invitation, and thank you all that are attending. Let me introduce my colleague in this panel, Patrice. Patrice, I think most of you know. Patrice Etlin is the managing partner of Advent in Latin America. He's also a member of the Global Executive Committee. He was actually a founder of Advent in Latin America, which started already 25 years ago. He has been with Advent since then. And I can say that Advent is clearly one of the most successful funds globally and also in the region. And their success in the region is highlighted by the fact that they are currently, they raised their seventh fund in a macro environment that has proven quite challenging for institutional investors in numerous occasions in several years. And throughout this period, Advent has been generating excellent top-notch returns for its investors. So, Patrice, welcome. Thank you for being with us.
Thank you, Andrea. You know, it's a pleasure to be with you. You'll be also a long-lasting partner for us, you know, doing all those work with Bain. So thank you, ColCapital, to have us in the panel. I think this is a great initiative, and I'm very happy to be here.
Great. So what we agreed to do is really have a chat. I'm going to raise some questions that I think are relevant for the audience. And Patrice will comment on that. I'm doing a big effort as a consultant with those slides. I mean, not an unusual position, but we'll try to listen more than we speak. So hopefully we also have some time for questions from you. So if you want to raise some questions, you can use the chat button at the bottom of the screen to write them, and we'll do our best to address them if we have time. We have 45 minutes for all. So the idea was quickly go through the global industry backdrop and then focus more on LATAM, on Advent's experience, lessons learned in the region. Okay?
Good.
So, Patrice, starting, 2020 was a surprisingly resilient year for the global private equity buyout industry, given the pandemic. I think we never, at least myself and my colleagues, would never have thought 1 year ago, as we were in the first months of the pandemic, that everything stopped, that the year would end up with investments ended up in 2020 higher than 2018. They were actually 8% higher, notwithstanding the fact that it was this halt of activities in the second quarter. What, in your point of view, explains this resilience of the industry? Could you comment a little bit on that?
No, sure, Andre. First of all, there was a very high level of dry powder that was there. So there was massive fundraising going on between 17 to 19. So when 2020 starts, the dry powder was there. A lot of that fundraiser was not used. There was a total stop in the beginning that second quarter last year, but it pretty quickly resumed, and then we saw, a very, very active second half of the year. So, some explanations, the massive global stimulus that, occurred around the world, and they boosted confidence. And more, the side effect of that also is that it flooded, cheap debt in the system. So that was already cheap became even more available. to fund transactions at even cheaper rates, you know. So that combination explain, you know, how fast, you know, the recovery happened in the second half of last year. And an interesting aspect, you know, and actually we talked a lot about that, the two of us, you know, was how, you know, actually was most of the case so productive also in terms of, you know, investment shops like us to work remotely, and how it was productive, how we were able to quickly adapt to home office, and being able to do, you know, those massive amounts of transaction working remotely, doing due diligence remotely, and in several cases meeting, you know, management teams and sellers remotely, and that happened. We know nobody would believe that, you know, at the beginning of last year, and so this whole combination explained how 2020 ended up being, you know, so active.
Do you actually buy a company without being physically present in the company, or not yet?
No, I mean, we had, yes, one case like that, you know, and another one I mean, never went to the company, but met the owners at the signing, you know. I mean, who will thought some situation like that, you know? Of course, those were service companies, but we were not, you know, buying, you know, massive, you know, industries, or, you know, with a lot of infrastructure. Actually, all those companies were already working remotely, so. And let's say the insight visit was not so, you know, fundamental, let's call it. But who will thought that, you know, that we will be doing this, and it is working, yeah.
Yeah, and also moving on to the fundraising, it was also a very strong fundraising year, almost. Yeah. $1 trillion raised, the third largest total in the industry. Do you see, I mean, what's behind that? It's still, what are your thoughts on fundraising, and who are the GPs that are being successful? Any thoughts or on the fundraising side, what's changing and so on?
And actually, you know, I saw that number from one of your studies, Andre, you know, at Bain, you know, that shows, you know, that still 40% of LPs globally are saying that they are underallocated in our asset class. So, and they are intending to increase their allocation this year in 2021. And so you have that combination with a world that is still, you know, facing negative interest rates for, you know, risk-free or low-risk assets, and an asset class which is ours that has always, you know, overperformed public equities and of course, you know, fixed income. It is, you know, there is more and more demand to invest in our asset class. And so fundraising has been consistently increasing. And that was the case last year, the same, you know. Now, on the other hand, you know, and then when we're going to discuss about Latin America, I think it's interesting, you know, investors are, you know, the traditional investors in our industry are becoming, you know, more and more sophisticated, of course, you know, every turnaround, and they are, you know, we had a lot of discussions in the past about diversification, having to be in emerging markets versus developed market, etc. Today, the discussion is about absolute return, you know, and so, you know, what inside, you know, the private equity asset class, where can I find, you know, the best returns? If it is in tech, if it is, you know, in a region. And so, and that's what we're seeing, you know, LPs increasingly picky and a big flight to quality. And so it means that, you know, funds that have been successful are getting more and more demanded every time around, you know, and at the same time, also investors want to reduce the number of their relationships, you know, they want to manage fewer managers, and those managers are getting, you know, a flood of interest. So we're seeing a lot of those trends still going on and being exacerbated, you know, during the pandemic.
Yeah, we can see that as well from our side, as you say, with the exception maybe with a few very focused funds. The others tend to be those that have been around for a while and have demonstrated track record. How do you see this year? How has this year? You are a member of the global Advanced Global Executive Team. How has the year started? What do you see as challenges and so on for the short term?
Yeah, of course, I think probably, when we were back then, middle of last year, we didn't expect I think the pandemic still very much with us. Of course, vaccines came, in some cases probably earlier than we thought. But you see, countries trending, a little bit slow on vaccination. Even the US, that has been actually pretty effective, seeing recently cases, increasing again in some states, etc. And of course, our region still, deeply impacted. And I don't need to talk about it. We will talk about that. But despite that backdrop, we see a very active level of activities already in the first quarter of this year, in investment, in exits. And actually the challenge the industry is suffering, and particularly in the developed markets, it is high entry valuations. Like multiple have gone up, we see. I'm not even talking about specifically tech transactions or sector, but in, let's say, the more traditional sectors, we're seeing consistently valuations in the 10 to 12 times EBITDA entry valuations. With still a little uncertainty in terms of the macro, how will our economies or these economies in the developed markets operate and function after a lot of the plans and the support plans are not anymore in the picture. But valuations are rising, and the equity markets are very vibrant, and a lot of exits. And then we should also talk about the SPACs, which is kind of this new player, the new kid in the block, and that has also is also a factor of pushing valuations up. You are in mute.
What is your perspective on globally, not on of SPACs? Do you see them as a competitor? Do you see them as a viable funding? What are your thoughts on SPACs in general, not specifically to Latam?
No, listen, it became an incredible phenomenon. I was looking at the numbers, just this quarter, first quarter of 21, close to $90 billion of SPAC money was raised. This is equivalent of what was raised the whole year of 2020. And so if you consider, that of course this money will have to be put to work. You have probably half of the money of 2020 that still wasn't invested. Put a 2-to-1 leverage on this, you have like close to $300 billion of money chasing, transactions to be, between 25 to 35% owner of a company, because, those are look at minority stakes. So you're talking about a $1 trillion of deal value that will have to happen in the next year to year and a half. You have kind of this, in general, this 2-year window. That is a massive bubble, and a lot of this won't go. Is not going to go right. Actually, it will probably open very interesting opportunities for deal activity for us. Looking at take private some of those companies that shouldn't never been listed. At the first hand. So it is there. It is a clear phenomenon. It's been pushing valuations up also, and we've been, in some cases competing against SPACs. The sponsors that have, invested $3 to $10 million of whatever out of pocket, to put those SPACs they have all the incentives to make them de-SPAC, so to do the investment, after they got listed. So it is clearly, a massive player now in the industry, in the developed markets, and it's coming to our region, and we should talk about it.
Yeah, have you seen? Let's jump into that, and we'll go back to give an overall picture of Latin. But since we are in the topic, do you see already?
So for the first time,
initiatives.
Yes, for the first time, starting in the last quarter of last year, we saw SPACs being raised, and those are all, in general, NASDAQ listing, so U.S. listings, raised with specific purpose to invest in a Latin American company. Several of them, that I know, there's already close to 10 active SPACs with that mandate, from anywhere from $200 million to $500 million. And most of them are region specific, and most of them actually focusing in Brazil, but some of them already sector specific. So tech, a couple of them looking at tech, a couple of them look at agro business in Brazil. So it is there, and that's just the beginning,
Yeah, we share as Bain let's say, some concerns on these vehicles, and I'm not going to get into that, but there is a specific chapter in our P report of this year raising some points that I think LPs should be aware of. But anyway, let's go back to, before we get into the short term of Latin America, as I said in the beginning, you've been active.
4-to-1, 3-to-1, and have all those portfolio companies that were, leveraging dollars. I mean, it was a bloodbath, And so I think the funds that survived those periods were the ones that were more conservative in terms of, not mixing currencies when you're putting leverage in your company, having more control, not being so passive, being more hands-on and with an operational drive into your companies. And so we were just, some few names after that coming from more than 50 names to, a handful of names that went on, in the beginning of the 2000s. Then I think, the industry had a very interesting development. Then particularly then Brazil became, the main market. This was the golden years of Brazil, commodity booms, the first Lula mandate, 2002, 2006, the beginning of the real development of the capital markets in Brazil, with the Novo Mercado. And so we saw the first IPOs coming out after years of very little activity, and most of those IPOs, several of those IPOs were, backed by PE firms that some of them that had kept, those portfolios for 10, 12 years. And then we reached that peak, in 2010, 2011, record fundraising years for our industry in Latin America. Brazil only in 2011 were close to $10 billion of money raised, and this was, the emergence of several larger local managers. The time when, all the international PE managers came to open offices mainly in Brazil, all the big international names. Brazil was the darling. We were like taking off the Christ on the cover of The Economist. And then came the Dilma years, yeah. And then, but those years or so where, we saw the development of the Andean region was very, we opened our office actually in 2011 in Bogota. Mexico went a little bit slower, but the Andean region really picked up in terms of PE activity. A lot of local funds, and Peru, in Colombia, it was very active, and actually we did during this period, several interesting deals there. And then came, the big crash in Brazil, the huge recession. Brazil went down 8% between 2015 and 17, and the massive devaluation of the real. And then all those international funds that came opening offices thought, this Brazil was going to be the next China. It was a big disappointment. And so, and several investors, several managers bringing, blue chip investors in our industry lost their money, had unsuccessful investment, and LPs turned their back to our region. That's the reality. So this was like we had that second chance after we had the crisis of the currency at the end of the 90s, and it didn't go well. And so if you look at, again, with very few exceptions, the performance of that vintage, of Latin American funds, raised in 2010, 11, is very poor. And then there was a combination at that moment where actually China started to deliver. So China, that was always this promise and with very high, unrealized value sitting on their portfolio, started actually to realize those values, so several IPOs, exits. So investors that were, focusing, looking at emerging markets, they basically, flooded to Asia, to China, and to Southeastern Asia. So it was, tough year. It has been, more difficult years to raise money for Brazil and actually for Latin America. And and then fewer and fewer managers. So that's the reality when we compare to where we were, in 2010 to 12. Now, a very interesting phenomenon that recently picked up, is the tech boom in our region, and then particularly in Brazil, but we see this also, in the Andean region. Argentina became a dead market, unfortunately, and Mexico much slower with the political, López Obrador, the political outlook don't been so positive. So, I mean, the Andean region really picked up and replaced, some of the size that, Mexico had in the past, and Argentina basically died, unfortunately. But then the tech boom came, and very interesting, VC activity, but also moving into, buyouts, tech buyouts going on in software, and of course, all, consumers and B2C, B2B also around the internet. And we saw, very successful dedicated funds that grew in size, were able to fundraise, all these years, even during the difficult years in Brazil. And today, that are writing checks of, $150 to $250 million. And then, I think the last big one that came into this market, of course, SoftBank, with a $5 billion dedicated tech fund to Latin America. So this was a very interesting recent trend that is still working, and we're start now seeing also IPO of those tech companies in the Bovespa. So, not necessarily going to NASDAQ or, the US route, but in the Bovespa. And this started also like the end of last year and going to the beginning of this year. So that's kind of in a nutshell, 25 years of you have to be basically resilient,
Yeah.
and patient.
Yeah, I still, so let me see if I can summarize correctly some of the points that you're saying. From the LP's perspective, it has been not a particularly successful region, but in spite of that, this has led to a flight to quality. So some funds like yourselves, like others that have been able to generate returns in spite of this macro scenario, have been able to raise funds. And now you see these you mentioned we had an opportunity as a region that turned out to be a disappointment, but now we have the growth, the tech, which is providing also another opportunity. There are LPs that are willing to fund focused funds that are funds that are focused on growth, on tech. Is that correct?
No, that's absolutely correct, Andre. And the point we made before in terms of, the global trend, which is the same here, the flight to quality, and the fact that now, investors have less and less dedicated program, let's see, to emerging markets, or I have to be, or the BRICS, I have to be. I mean, this is not in the agenda anymore, or practically, or very small in the agenda. So the agenda is all about, absolute returns and what is, your net IRR at the end. That's it, And so, and they are comparing you to, again, I can deploy, this money in the US or in the UK. Why should I bother, if your returns, are not at the levels where I can get in those regions today, despite the high valuations, despite much more competitive environment, but I'm getting those results there, and I don't have the currency risk, et cetera, et cetera. So yes, we hear that, and it means, that small sets of managers are getting, much more, attention and a lot of demand, and as you mentioned, we are back, I think, at least at the scale of funds, above the $1.5 or $2 billion mark. We are again back at just, a handful of names in the region, and those names, will keep, getting, more and more interest as they keep performing. But it raises a question, because I get that question from very large institutional investors of, is this a real asset class for me? I'm looking to deploy, $200, $300 million checks in a fund, and I have maybe 2-3 options, So when I go to my investment committee, can I say that, is this a region or an asset class in the region that I will be able to keep investing for the next, 20, 30 years? Because that's the way big sovereign funds, big pension funds think. They're not looking at the next 4 years. They're looking at the next, 3 or 4 generations of funds. So, I think as an industry, if we're not able to deliver, keeping being, at least, less volatile, it will be every time more challenging to raise big funds. Now, you will have, and as we said, this very interesting, sector focus around tech, or sometimes very specific countries, or small or more mid-sized, strategies that could work. But I would say for the boilerplate, big fund, large checks, etc., we are becoming fewer and fewer over the years. That's the reality where we are today.
And given all this volatility and part of it, how does the fact that you operate in more than one country helps, or in practical terms, it doesn't help? What's the role of being in different countries in the region?
No, I think it's a great question. For us, this is core to our strategy, and it has been extremely. I mean, it was one of the reasons that we were able to navigate for 25 years all those volatility and keep, raising funds bigger and bigger every time, which is, actually the proof of success. The fact that we are, across a pan-regional fund is an explanation to this, because, our Latin America, I mean, it's a great label to put, but, our countries move in different directions at different moments, and even our currencies, move in different directions. So the fact, for instance, when, Brazil was at the peak of this exuberance, as I mentioned, back in 2010, 11, crazy valuations here, we were selling Brazil, and this is the moment when we started investing in the Andean region, in great assets, attractive valuations, portfolios that, actually we've been selling now over the last 2-3 years with very successful returns. And so the fact that I was able to play, the different cycles of these countries inside our region is a fundamental piece of our strategy, and I think it's an advantage that we have, compared to a single country fund that will, being a single country fund in Brazil, in 2015, 16, when you have invested your portfolio in Brazil back in 2011, 12, nightmare. So we were able, but when you're sitting in a country fund and you need to invest there, your investment pace is burning in your hand. You have to do it at the end, and sometimes you're not doing it at the best moment in terms of the cycle of the country. So it's a good hedge for macro, and it's a good hedge also in some cases for currency.
And touching on this point, I mean, you've been in the region 25 years, so you were saying diversification across countries served you well. Diversification across sectors, I believe, also served you well.
Yes.
Other thoughts on lessons learned that other GPs that might be listening in could benefit from?
You mentioned sector. I think it's very interesting, Andre, because we started, I think, as most of the funds, as more generalists, because also, and actually, despite the fact that Advent already back in the mid-90s was already pretty sector focused. And of course, it's easier for Advent, I say, the global fund, which today is almost, $20 billion vehicle. And so we had the benefit back in the mid-90s already to have, those global sector teams, looking at retail, healthcare, financial services, etc. But the fact is, those industries were not so deep in our region, and I think they became deep in Brazil. But on the Andean region, sometimes, if you are, okay, I'm a healthcare specialist, and I want to write a $100 million check, how many deals I will be able to do, And so it is challenging to go sector specialist in markets that are narrower. So that's why, most of the players end up being generalists. But the fact is that because we had, this very strong foot here in Brazil, enable us actually to become more and more, sector specialists in a market that has enough depth that we are able to do that. So today, we became, and we kind of accelerated that transformation already back, I would say almost 10 years ago. Now we are today sector organized, despite the fact that, of course, we have the country organizations, but, we have, sector specialization focus among 5 main sectors that we follow, which is, retail, consumer were very big. It's a big sector for us. Business and financial services, healthcare, tech, and that's and actually we had before, we had TMT, etc. And now, it is we focus on specifically on tech. We've done already, 3 or 4 deals, including one in Colombia at the end of last year. We bought a very interesting software company, into banking services called Socio. We did a large investment in Nubank in Brazil, which is, the biggest financial fintech in one of the biggest in the world today. And so that's a big vertical, and where, we are benefiting also of all that activity from, the tech VCs, etc., that are providing portfolio pipeline for us to, be looking and investing at. And then the last vertical, which is a kind of a big bucket, but we call it industrials. This is where we're seeing some of, chemical deals and others. Actually, we had a company that started also in Central America and in the Andean region that today, is based here in Brazil. So sector is very important. I mentioned that before, but for us, it is critical, this control-oriented approach we have, which doesn't mean necessarily to be, having 51% of the capital, no, but having the appropriate governance that, we can push, our value creation plans and bringing to the company all the resources we can and we have in terms of portfolio support, in terms of operating partners, industrial advisors we have, the sector knowledge, the exit knowledge in terms of, how to bring this company to be more valuable on the exit route. Those are very important components. I think, the passive minority position sitting there, going to the board, every quarter, it is tough to deliver good results in our company, in our business, in the region. A recent factor that's interesting, Andrea, is that leverage has become more and more available, and of course, with the drop of the interest rates, also in our region is happening, and we're starting to have, the ability to leverage 3 to 4 times acquisition leverage at the starting gate, our companies when we do a deal. When before, we were sitting on commercial loans from the banks with very tight covenants, obligations to start, repaying principal very early in the process. So it was not a very, efficient, it was very cumbersome product. So this has evolved a lot. And that also has been, of course, helping us, recently in terms of returns, etc.
Yeah. So we have only a few more minutes, and there was a question here, and that you may want to comment on whether there's been a lot of discussion on ESG investing and diversity, inclusion, and what is Advent? What's the how relevant are these two topics for Advent? What is Advent doing or thinking about ESG investing and diversity?
No, that's that's a very important topic, and ESG has been in our agenda for, I would say, almost 15 years now, and so we were backing ESG principles in our due diligence already, in 2005, 6, hiring specific, advisors looking, of course, at all the environmental and social questions. But when you think about governance, what we've been doing in the region for 25 years, it is, just the fact that because the way we look at it is that we put a governance of a public company into our private investments. So, you immediately separate what is, ownership and management. You should separate what is board and management, and you create the committees, you put independent board members on the board. So this is an immediate, value creation right there, and so everybody knows what they have to do, what they are doing, and with one single objective. So this has been critical in our agenda, and now it became critical, of course, in the agenda of all our investors worldwide, and it is an issue, and so I go from when we completed our fundraising last year, and the fact that, Brazil was not exactly in a very good environmental image out there with all the pictures of the Amazon burning, etc. I mean, I got several questions on this, so, and this is the first time actually it happened in a fundraising with us. So it is a critical factor, and several of our investors were signatory of the letter that was wrote to President Bolsonaro here. And we publish, ESG reports. We've been doing this for years, but it is very relevant to our reporting and the way we look at deals, The other aspect you mentioned is D&I, and we have, a global D&I committee that was set up now already 5 or 6 years ago. We have a Latin American one that I chair, and for us, the most and many benefits and incentives we've been doing, particularly on diversity of gender, and that's for us in the region still, I think the biggest challenge we have, and we've been doing, programs at Advent, going to colleges, universities, and try already in year 1 or 2 of those colleges, incentivize, women to follow, a financial career, because what happens is that if they don't start doing this, in year 1 or 2, depending on what they select, as themes they're gonna study, etc., they end up, when they sit on an interview with us in their year 4 or 5, and not be able to talk about cash flows or valuation, it doesn't work. So we found the bottleneck. It was not even at the promotion out of college, but at the beginning of college. So we've been very active and it's been great. Actually 90% of the hirings we did, over the last 18 months were women across all our offices. So very happy with that. My partner Mauricio Salgado in Bogota is a big prominent of that too. And it is key to our culture globally. And we've been, implementing this very strongly in Latin America too.
Thank you, Patrice. And for so much to talk to, unfortunately, our time is up. I hope our audience enjoyed listening to your insights, your huge experience. And thank you. It was great to see you again.
Yes, pleasure, Andre. And thank you for everyone. And anyway, we're here for any follow-up if needed, later on. Thank you all.
Thank you.